Good afternoon and welcome to another webinar in the series that we've been hosting, just to highlight the different areas and business units of RBC. At the last session, we touched on options to invest with RBC investees and RBC direct investing. In this session, we're going to delve into the often underestimated world of insurance and explore how it serves as a cornerstone for financial stability and peace of mind. So whether you are a newcomer to the realm of insurance or very seasoned in that realm, let's shed some light and just provide insights on how to navigate some of the complexities of insurance.
All opinions and views expressed by the speakers are not representative of views and opinions of RBC Dominion Securities, Inc. All information and opinions provided in this video are in good faith, but without legal responsibility.
The agenda for today is I'll do the introduction as a brief intro, and then we'll have our panelists talk about their experience in the industry, the different business units that they're in, and the type of clients that they serve and the problems that they solve for. And then at the tail end, we'll have time for Q&A. If you are joining for the first time, my name is Orlando Lopez. I'm an investment advisor with RBC Dominion Securities. Been in the industry for a number of years, having started at a different institution, and joined RBC in 2019. A lot of what I do is to help individuals and families with financial planning, retirement planning, and that in many cases will involve looking at ensuring that the plan doesn't go off the rails if some of life's events sort of comes up out of the blue. Outside of work, I do keep busy as well. I've been involved in a community and two young kids, so I've got a son and a daughter. So that keeps me pretty busy on evenings and weekends, and I've been married now for going on 11 years. We're fortunate to have join us today from across different areas of RBC. We've got Peter, who I work very closely with. He's part of RBC Wealth, and his area of focus is on using insurance strategies, specifically as it relates to estate planning, tax planning, and tax minimization mostly. We also have Roshan, who's from RBC Insurance, and then Melissa Rodrigues that focuses on private insurance. It's a very sort of niche area within the realm. So one of the things I came across that I thought would be good to share is this quotation, which says that insurance is this silent guardian that we often overlook until life whispers a reminder of its necessity. So I think the panelists, certainly they are experts on insurance. I'm sure they fully agree with this, that it is one of those that often overlooked, but it is very important in ensuring that just the realities of life don't sort of curtail all the plans and hard work that people put into. When we started these webinars, one of the things that we had touched on was just the fact that there's different areas of RBC, right? There's different decks. And we had started with personal banking initially, then we moved on to commercial banking, and then the wealth management area. So you can kind of see this other pillar here, which is now insurance, right? And it is a very, and on its own, it's a large industry, even beyond just RBC. It's a very, very large industry in general. We focus on more on the personal side, as we're going to talk about today. But the industry itself delves into commercial, and it's a fascinating industry, one that I can also continue to learn about. In terms of the line of business, when you do go to the RBC website, one of the areas that you'll sort of see is if you were to click on About RBC, then there's a geographic breakdown. And once you click on in Canada, for those in Canada, you'll see the different products or services or areas that RBC offers, and insurance. As I mentioned before, we touched on banking, personal banking, commercial banking. Then we went into the wealth management space, which is where I'm predominantly part of with RBC Dominion Securities. Went into investing options with investees and direct investing, and now we're going to touch on insurance. We won't really be going into the capital markets. That is something more on the commercial side, and likewise, we won't really be touching on investor and treasury services. But you know, if anybody's curious, you can always go and sort of delve into those and always reach out. We've got the contacts that we can make the introductions for anybody that needs a bit more info on that side. And without further ado, I'm going to open the floor and have Peter sort of share with us just the experience or the journey towards where you're at right now, Peter. So, you know, what were the other business units that you've been in, or firms or industry? And then we can kind of talk about what is it that you do here at RBC Wealth.
Thank you, Orlando, and thank you for everybody joining us. I've been doing banking now since 1995. Started in university and worked my way up from being a CSR all the way to being a personal banker, did some management, and then realized I really like the investment side of business. So I've done many roles similar to Orlando. But at one point, I realized I needed a little bit more. So I worked in head office at Bank of Montreal and actually managed financial planners across the country. And then moved into different areas like Nesbitt Burns. I actually worked at RBC as an IRP for a bit, but then realized later in life that financial planning can't be done without insurance. And that's where I landed where I am today, where doing estate planning for our financial planning client needs is probably one of the most important pieces that when I worked in the bank channel, we could never talk about. So finally, we're in a place, Orlando and I at RBC Wealth Management, where we can talk to our clients and our people we work with about the full financial planning picture, which is sometimes missed in other areas of the banking world, based on bank regulations. So over the years, I've worked in many different roles, and happy to say that I'm in the best one that I've ever been in, because I get to work with Orlando and his clients. And more importantly, that's what leads into who I work with, is the clients I work with are from advisors such as Orlando, and they're Dominion Securities clients. And typically those are clients who have wealth planning needs, and insurance is the piece that really puts it all together. Most clients, whether they have children or if they have many children, whatever the need is, nobody really likes to pay taxes. And when we pass away, there's a lot of taxes typically owed. And that's why we look at insurance from a long-term estate planning need. So I'm going to actually jump into my presentation, which actually will tell you who I'm what clients we work with.
Okay, sure. While you're doing that, I'll add one thing, just for context. I think what you just mentioned, and it will help everybody on the call. You know, one of the bank regulations that Peter referred to, which we all have to abide by, not something that we sort of, created, but the rule doesn't allow for insurance to be discussed or offered at any bank at the branch level across the industry. So regardless of CIBC TD. So the best way to kind of think about it is this, because I've been using that whole cruise ship analogy. Think about it as being, it's just not allowed in the same way that at the kiddies pool, you cannot find an alcoholic drink. You've got to go to the adult section to kind of even have that offered. So, not allowed. And that's something that, even knowing what we know, knowing what I know, if I were to go back to that a role at the bank of any of the banks, I'm not allowed or able to talk about insurance beyond very specific ones: mortgage insurance, creditor protection. So that's something that why I'm really glad that people are joining, just to kind of hear what Peter's and our other panelists have to say. So Peter, go to the other screen. I think I'm seeing the way it was before.
Oh, so it's
kind of seeing, yeah. If you got two screens, it's probably the other screen, the one where it shows us the slides and not the.
There we go.
There we go.
That's it. Perfect. This presentation, I can talk for about 2 hours on it. So what I'm going to do is limit it. the presentations about the 10 wealth management solutions used by using insurance, I'm going to focus on the first 5, but really what it will do is help everybody on the call to understand what it is that we do. And, the financial planning process is very detailed. And if you've ever been through the process with Orlando, we talk about where we want to be and where we are, and we build a bridge to get there. But the idea, though, is we can't control what you've already done. We can just help you get to where you're going from here on out. But one of the biggest fears and one of the biggest needs for insurance is, what happens if I have a crack in the bridge? Meaning, if I prematurely pass, what happens to my wife and kids financially? What happens if I can't work because I fall off a ladder or I get hit by a car? What happens if I get ill with cancer, heart attack, stroke, or some major illness where I need some extra medical care? And that's really the foundation of any home. Insurance is basically protecting your home. It's protecting your plan. Because the last thing I want to do is have to rely on my investments that are pegged for my kids' education or retirement to have my family survive off of it, now leaving them nothing to live off of later in life. So, the 3 main things that we talk to our clients about from a protection point of view is disability, critical illness, and term insurance. And these are things that we review and we can figure out based on the plan. And I'm not going to spend too much time on that today, as we have to go through the top 5. But that's really the financial planning process in insurance. But more importantly, what we're seeing now is the tax efficiency of transferring wealth. Unfortunately, when we pass away, if we're married, couple, everything goes from one spouse to the other tax-free. When wealth is transferred to the next generation, that's when we have to pay tax. And that's where our estate, our legacy can be depleted by almost 50%, depending on how we're invested. So the idea is we can use insurance to help us transition wealth the most tax efficient manner. Whether somebody is a business owner or a personal investor, these are things that we look at and review. So when I look at the top 10, I'm going to just go through each one of them quickly just to tell you what they are. Estate tax funding, dependent support, estate equalization for business owner families, and that can also work for personal families as well. Tax efficient alternative to fixed income, leveraging insurance in retirement, which is a great source for income. Insured annuities, which I won't touch upon today, but if anybody wants any more information, please reach out. Buy-sell funding for business owners. I don't believe there's many business owners on the call, but if there are, please reach out because that's something that's very interesting to look at. Collateral insurance, charitable insurance, and asset protection. Those five at the bottom between 6 and 10 are important, but they're traditionally not used by many of our clients that we talk to. But we can go through those if you ever have more questions. So estate tax funding, if we have an RSP, if my wife and I each have an RSP, and let's say that the balance is $500,000. If I pass away, she gets all of my RSP. If she passes away, I get all of her RSP tax free. But now on the passing of the second spouse, all of a sudden there's a liability. Of that $500,000, it's treated as full income the year both of us pass away. And that means there's going to be a 54% tax bill. So 54% to CRA, 46% to our kids. Now, some people will say that's okay, we have to pay our tax anyway. It's true. But what if we help you smooth out your taxes and have less left to CRA at the end and more to your kids or your loved ones? So we always look at ways of how we can, 1, deplete clients' assets while alive, and 2, make the most tax efficient estate when they pass away. It's simple that I say this to a lot of clients, whether they're wealthy, very extremely wealthy, or just, good savers. I would like to see all of our clients pass away broke. Meaning you want to pass away with 3 things: TFSA, principal residence, and insurance. Everything else we own will have a tax implication. And that's why we're looking at trying to pass away as broke as possible. Now, it's probably not going to be possible for most clients, but the idea is at least we can smooth out our taxes instead of guaranteeing that 54% goes to the CRA when we both pass. So this has many different meanings, but more importantly, it's just leaving more to the family than the CRA. The next piece is dependent support. Whether we have a child that has a disability. So in this case, a perfect example is a lot of people like my own family. You know, I'm married, I have 2 children, we have a mortgage. If something happens to me, I need to make sure that not only is the mortgage paid off for my family, but we're also leaving enough money to generate an income for them to survive. We don't want to put our family in a situation where we have to all of a sudden downsize because one of the spouses passed away. So, and this is what we hear about when people aren't protected. And unfortunately, Orlando kind of mentioned it earlier with that quote, is you can't go and buy insurance when your house is home insurance when your house is on fire. It's the same thing like this. So when somebody calls me and says, I really need insurance right now, I usually ask what's wrong. So the idea is it's better to be prepared before something is wrong. And I'll tell you right now, majority of our clients that we're seeing, one of the 2 spouses, or if it's an individual person, we're finding more people have health issues that are affecting their costing for insurance. And that's just because we're living longer. And traditionally, people in their 50s or 60s will have some sort of health issue. So the idea is let's start planning for these needs earlier in life versus waiting. So dependent support is very important. One thing that I just want to touch upon, depending on the family structure, is if we have a child that has some special needs, very minimal or very severe, it makes this need even more important, because now we have to make sure that there's enough left over to make sure that they're taken care of in the long term. So dependent support to me is one of the more important pieces, and it's really the foundation of any home. Estate equalization, again, I don't know if there's many business owners on the call, but if I have 2 children, I own a business, and one of the children is going to inherit the business, I have to also make sure that the other child is going to be left enough, whether is they receive the principal residence or something else, but we usually top up with insurance, because obviously a business may be worth a lot more than other assets. But it could be even more simple than that, is if we have a family cottage and one of our 2 children want to keep the cottage and the other one doesn't, well, now I'm going to give this one child a $500,000 asset free. What do I do with the other child? How do I make sure that they're equalized? So this is something, again, you can do it through a will based on the amount of assets you have, or you can just purchase an insurance policy that will help pay out to the family when both of you pass away. And that's to me very important, because we have to make sure that we're left over with something to make sure that everybody's equal. And I just want to take a quick step back. Again, when I spoke earlier about, you know, one spouse passing, everything's tax-free, it's when both of us pass away. So again, if we have children or we want to leave a legacy and we're the last one on that list of people passing away, we want to make sure that our taxes are fully paid, ready to be paid for. So that's why we look at different policies and different structures to make sure. And in this case, for equalization, what we do is normally set up a structure where it's joint last to die, meaning when both of the spouses pass away, the policy pays out. One is it reduces pricing, and 2, it helps you get approval with even substandard health, but it helps you get an approval, and then that money is paid out when both spouses pass away, therefore leaving an equalization, or it leaves the money to pay the taxes. So this is something, again, when we do our financial planning, we can go through, but it's a key piece to all of our planning that we do with our clients. Tax efficient alternative to fixed income. So when you sit down with Orlando, you look at your asset allocation, you talk about things like cash, fixed income, and equities. And as I mentioned earlier, I was on the investment side for many years. It's something we talk about with our clients with anything we do. We always talk about diversification. So it's the same thing. Do I only own real estate, or do I own real estate and some stocks? If anybody on the call is an RBC employee, sometimes a lot of our clients that are RBC employees end up having a lot of RBC shares. Is that the best way to be diversified, or do we want to look at other options? Well, Orlando can help you on the investment side. What the insurance does is it creates another vehicle, which is called insurance, but it really works and looks like an investment. Because what happens is this investment called insurance will grow tax-free, it'll transfer to your next generation tax-free, and it can be used to generate a tax-free income later in life, which I'll talk about in a minute. But realistically, it does those 3 things. The easy way to put it is insurance can be a TFSA on steroids, because we can buy bigger policies and have the same implications as a TFSA from the tax point of view. The main difference between a TFSA and an insurance policy that we're talking about is a TFSA goes up and down, even though everything's tax-free in there. Insurance, similar to GIC, can only go up, it can never go down. So the way we structure the policies is you'll never have a negative return on an insurance policy where you can in any other investment vehicle. So that's why when we look at it, it's more similar to a GIC or a bond from a risk perspective. But in the long run, because of the tax efficiency, it gives you actually equity type returns. And again, if we look at your plan and we see that there's a long-term need for this type of coverage, we can show you how that works. But most of our clients that have started building wealth and know, and now we can predict their tax bill at the end of the day, well, we're using something called whole life insurance to help us meet that need. Okay. So even if you look at your own situations now, one thing I would recommend for everybody to look at is, if I have so much in RSPs today, what do we think it can project in the future? And how much of that do we want to leave to CRA versus our kids? Okay, so insurance is really another investment vehicle. It's another pool of capital. You know, we have our home, we have our TFSA, we have RSPs, maybe a LIRA, we have non-registered, we have rental properties, we have a cottage, we have a business. Well, insurance is just one of those buckets as well. But more importantly, it's the most tax efficient one that we can offer. Okay. And this is the piece I just mentioned earlier about using insurance to generate a tax-free income. So what happens now is, as I mentioned earlier, insurance grows over time, but it creates an asset called cash value. And what this cash value is the amount of money that you can cancel if you cancel the policy. However, what we do is we set up a loan facility later on in life in our 70s or 80s, where a client can now borrow against the policy while they're alive, and then the death benefit pays off that loan later on when they pass away. It's similar to doing a reverse mortgage or a chip reverse mortgage on your home. Insurance is another asset bucket. Again, it's more of an asset than it is an insurance policy that you can use to generate that tax-free income. So we leverage against an insurance policy to help us create an income source in our retirement. And some of the main reasons why our clients would ever do that is, if I need to go into the nursing home and my wife wants to stay in the principal residence, well, now my financial plan's a little bit mixed up, because we have to now find a way to pay for that $5,000, $6,000, $7,000 for myself to be in a nursing home, as well as continue paying the bills of the home. Or if we want to get a nurse to come and live in the home. The other thing is, you know, I look at my parents, and my kids and my niece are the most important people to them. So now if my parents want to gift to my kids, their grandchildren, why not do it while they're alive than when they pass away? So now they can go and borrow against the policy and give each grandchild $100,000 tax-free rather than leaving it when they die. One of the things that I find that, especially the older generation, don't understand is it's better to see your family spend the money than give it to them when they don't need it. So these are some of the things we look at. And leveraging, to me, is a big piece of what we can do. Again, having insurance as an asset class where it can grow tax-free, transfer to the next generation tax-free, and be used to generate a tax-free income. But this type of insurance is not as important until we've set up all the other insurance needs, such as term, disability, critical illness. So when we do our financial plans, it's always a holistic review of somebody's insurance needs. But more importantly, it all comes from a financial plan that Orlando can help you with.
Yeah. I'll add one other thing to Peter. What you mentioned with the scenarios of grandparents wanting to help their grandchildren, and they could leverage the policy or using it to sort of support care needs if one person needs to sort of move into a home. At that time, not something that can be executed if, just like that burning house, you have to plan way ahead when you're in better health and younger, way before the need arises, because insurance is something that is age and health dependent. So really appreciate you going into that detail. And just for everybody on the call, Peter will have to jump off, so he won't be able to be on the Q&A. So we'll have Roshan, who's going to touch on the Department of RBC Insurance. And one other really important thing I want to point out, which is essential, as we've been going through this series and we're talking about the different areas of RBC, you know, bank side, RBC Dominion Securities. Peter supports the clients at RBC Dominion Securities that I work with. So in the event where an individual needs to explore and to get coverage, if they have chosen, if they're not a client of RBC Domain Securities, it's still something that can be sort of thought for. And that's sort of where Roshan sort of comes in and can kind of, definitely let him explain his journey. How did you get into, this part of RBC? Where were you prior to that? And to have everyone. And thanks, Peter. Okay.
Excellent. Well, first of all, I just want to say thank you, Orlando, for putting this together. I've been at the company for 5 years now, and I think this is the first time we're kind of doing something like this. I think it's called the Vault, so I think it's fantastic. Thank you so much. And in regards to everything Peter covered, man, he's a wealth of knowledge, So from the mid 90s to now, he's been in the business. So what a great source for you guys and your clients. And you touched on a lot of great points, especially now with the recent changes to capital gains that we received last week. Insurance is the perfect solution. It's actually a hidden secret. It's there, but not so much of a secret anymore because investors are now looking into alternative solutions, and they know about it. Yesterday, we had a client here at 7 o'clock, and he has, I think, 4 million of worth of assets in terms of buildings. But heard about the capital gains, he's worried. He wants to find alternative solution. How can I protect it? And this is one in a million, right? So lots of scenarios. It's going to be happening in the next little bit in terms of these conversations. But yeah, Peter did do a good job speaking about it, and that's a part of what we do here at RBC Insurance as well. But overall, though, just a quick little introduction. My name is Roshan Charles. I've been in the business for a little over 10 years. I was an advisor initially, and then got into a leadership role as a manager. And then just about 5 years ago, moved with RBC in RBC Insurance, where I now oversee professionals of home and auto, life, health, wealth, and of course, travel insurance as well. So we have a variety of solutions available to our clients. And everybody is unique. Everybody is different. So we sit down with you, find out what's important to you, and cater our advice accordingly. There's certain solutions that we can help you with, and if it's something we can help you with, great. If not, we leverage our partners and we make sure our client is taken care of. In regards to time, Orlando, how much do I have just so that I can be mindful?
Yeah, I'd say 10 minutes. We'll try to start Q&A 7 to 10. We'll try to start Q&A by 12:45, so we'll have time for Melissa as well.
Okay, fantastic. All right, so I want to be valuable. So what I'll do is I'll do a quick little presentation. I'll go through it quickly. My understanding is our audience are somewhere internal with RBC and some are external. So hopefully this still is something that's relevant to you and you can take advantage of. So again, we'll talk about protecting what matters to you and a little bit of an introduction to RBC Insurance and how exactly we help out here. All right, so this slide very similar to what Peter talked about. In terms of financial planning, there's a lot of pieces. And with us, it's the protecting piece, right? So insurance and risk management, we take care of this, and this is pretty much our bread and butter. That being said, it's a comprehensive when it comes to financial planning. And in terms of insurance piece, we specialize on that. So I have a question, and again, you don't have to answer this, but in the back of your mind, you can think of it. What is your most valuable asset? And when we ask this question, a lot of the times folks say it's their home, it's their portfolio, savings, etc., right? That being said, we always kind of go into saying the most valuable asset that we have is yourself, your ability to go to work, earn an income, and provide for your family, etc. So that's why, again, when it comes to protection, we always say definitely protect, your home, your auto. That being said, we have to always protect our life and our health because that's what allows us to go to work, earn an income, and continue to make sure that we provide for our family, whether we're here or we're not. So this image over here, the financial house, does a really good job letting us know that a good financial plan is like a nice solid building, a nice solid house. You need a good foundation, And then, you have your first floor, your second floor, attic, right? So the first floor, the foundation, is the insurance piece. And when we don't have that strong foundation, when something goes wrong, to Peter's point, we don't want to go into our savings and RSPs or TFSAs and take out our lifelong savings, but rather when we have insurance, that'll be there to protect us, including home and auto, etc. And then from there, we can go into self-directed investments. So that's what this is all about. As I mentioned, the foundation is life insurance, health insurance, protecting what matters to you. And then your first floor would be your non-registered savings, your TFSAs and RSPs. And afterward, you want to diversify, look into alternative investments. There comes a self-directed investments. In regards to going back to that question, what is the most valuable asset? In order to really drive home this message, this little chart helps us really understand that, if you're a 40-year-old male, okay, or a female, you are earning $60,000, assuming a 5% annual rate of return or increase in your income, you would be earning $2.8 million. And again, this chart gives us an idea, okay, if you're earning 80, 100 onwards, and based off your age, how much you could be potentially earning prior to your retirement years. So quite a little powerful slide. Lets us realize, what, this is what insurance can do. It can protect our income in case something were to happen, right? So again, hopefully that message resonates with you.
Roshan, maybe people have been mistaking largest asset with most valuable asset. So if they were thinking of their house or their portfolio, they're probably thinking, well, my largest asset is my house, but their most valuable is actually themselves and their earning potential and them being valuable to their family, really.
Yeah, that's a very good point, exactly. So it all depends on, how you see it and based off of your own unique situation, that answer could be different as well, but that's an excellent point, Orlando. So, when we always think about our future and we set visions, it's always positive, right? Like how we want our retirement to go, how we want our next 5 years, next 10 years to go. And this is very normal for the human mind. That being said, there are incidents that happen where the uncontrollable happens. We hear of stories where, somebody in their 30s or 20s get cancer. That passed away in the 401 because of a car accident. So those things could happen. And if they do happen, we want to make sure there is a safety net in place. And again, that's where that whole insurance piece comes into place. But again, we want to focus on the positives, continue to build for our future. But that being said, we always want to have that foundation in place so that, our family and our loved ones are taken care of. What is the risk? Would it happen to me, right? That is what, in most people's mind. Yeah, things happen, but it's not going to happen to me. So this little chart is amazing. It tells us the probability. So somebody in their 35 going on a long-term disability is actually at 50%, right? Of it lasting over 90 days. And again, the chart does a really good job in terms of, letting us know based off your age, what is the probability, and it's a quite a bit amount, right? So you can tell that it could happen to anybody, and one of the ways that we can protect ourselves is through insurance solutions. The bar at the bottom as well, nice little slide telling us the duration. One thing, if you need to take a day off or 2 days off or a week off of work, but certain long-term disabilities based off of age and the statistics we have, it could land anywhere between 2 to 3 years. Again, for somebody that's 35, the duration average is about 2.8 years, 43.1 years. So just think about it. If you had to get off work, not earning an income for 3 years, and the bills don't stop, what happens to our savings, our investments? And that's what this slide is all about, to help us kind of understand the impact of having the right protection in place. The big question, okay, we want the protection, but it may be expensive. How much is it, right? What could it be in terms of the cost? So that's a big question that we get, and we always do our best to work within a budget to make sure that, you're not breaking the bank and the priorities are taken care of. This little slide, I don't want to go too much detail in, but it talks about, you have a job A where you're making $60,000 a year, job B, you're making $58,000 a year. That being said, with a job A, if disability happens, you would get zero coverage. But with job B, if something happens, you get $40,000, $39,000 tax-free. Which one would you choose? most people would choose job B because, you get that $39,000, right? So again, in terms of cost, people typically spend about 2 to 3%. Then again, it depends on each individual. So we can look at, your particular budget, and based off of that, we can cater the solution accordingly. Just another little example. So somebody that has a car worth $35,000, insurance cost for that could be about $1,200, maybe more nowadays with everything that's happening in the GTA. But that comes up to about 2% of their income, which they're using to protect. House, again, there's a very outdated slide. It seems like I don't think we're going to find a $400,000 home in the GTA anymore. But, for $400,000, insurance costs about $1,000, 1.6%. So you can kind of think of it double in terms of what it is right now. And then again, going back to that point earlier about your income, let's say your lifelong earning is going to be $3 million. Why not spend 1 to 3% to make sure that we protect that? So no matter what happens, that income is still being earned. I want to leave you with some more questions. Again, you don't have to answer it, but maybe take a screenshot of it or take a picture, and you can ponder over it. Do I fully understand the insurance coverage I have today? Do I want choice and control over my insurance? Because there's a lot of great options out there. Have I done an insurance review in the past year? If my family no longer had my income due to death or disability or injury, what would happen? Okay, so again, thank you, Orlando, for doing this. Really appreciate it. Where we can help is sit down, get to know you based off of your situation, ensure that you're well taken care of. If any of you are RBC employees, there's some additional good news. You do have discounts that is accessible to you. For auto, it could be 25, home, condo, 10%. Disability is a big one that we've been talking about. That's 25%. Critical illness, 15%. And of course, not all life insurance, certain life insurance products, 10%. And these discounts are not just limited to yourself if you're an employee, but also your family members as well.
Okay.
Hopefully,
Thanks, Roshan.
you found this valuable, so go ahead, yeah.
To find you, to find RBC Insurance, either through the website, there's few physical locations, not as many as the branches. Everybody's familiar with the branches, but your physical location, you do have a physical location.
Mm-hmm.
But what are the best places? How do people typically find folks to connect with if they're looking for travel insurance, home insurance, all these companies?
That's a wonderful question, Orlando. And I would say we're light years ahead in terms of insurance now versus, like I say, 5 years ago, 10 years ago. Things have changed dramatically. And we got to say thanks to COVID for that, right? We understand clients have limited time. They want things yesterday. So we want to be able to cater to that. So we're available through WebEx, just like you. We are on meeting today. We can do the exact same thing from your comfort of your home. We can connect and do things virtually. That being said, we do have our stores. So we have a location in Oshawa. We have a location in Scarborough, which is Grangeway. We have actually multiple locations across the country. So based off the client, we'll find what works best for you. And then based off that, we can find a location in person or, of course, virtually, whatever works best for the client.
Yeah. All right. Thanks. And Melissa, one of the things, definitely let everybody know which area of the organization you are now, where you were before, or if you've been with another industry, another area, and you're unique. Because I find your area is really fascinating. You see some of the unique. You've got probably some of the best stories in terms of your area of the industry. And let me know when you want me to pull up your case study.
Thanks, Orlando, and thank you everyone for joining in. Yes, I am unique in a way. I'm one of the right way to put it. I'm a very small piece in this big map of RBC, and even within insurance, I'm one of the smallest pieces there. But the reason I'm unique is we deal with niche markets. That means we insure bridal path homes. We're insuring the Rosedales and the South Forest Hills. We have lots of celebrities, basketball players, lots of athletes as a clientele. So these people have very fancy needs and very fancy requirements, like the Ferraris, the Lamborghinis, like you name it and we have it. So a quick introduction about myself. I have been in insurance for about 23 years now, and 10 of those were with Roshan's division. In fact, it was RBC's field sales. So there I did home and auto for the mass markets. So anyone like a normal Toyota, a normal home, or a normal car, like everybody needs insurance. They cannot pick up the car without insurance. They can't close their home without insurance. So that's what I did for about 10 years. And for the last 4 years, I moved to private insurance. So with RBC, I've been for about 15 years now. And prior to that, I used to do life insurance. So I do understand insurance fully. But this segment that I'm in is very exciting. So I think this is my favorite role so far because every day is a different story and it's a different risk. Like yesterday, I had a call for like, okay, we just picked up this 4 million yacht. It's sitting on Lake Pickering, on Lake Ontario and Pickering. Like, we need insurance right away. So with us, we don't even get insurance right away. You got to wait. There are 3. Like, just to get this yacht insured, it had to go right up to the head of underwriting at Aviva. So it's not easy, but it is very exciting when you look at client profiles and you see the various aspects that they look to insure. The yacht was just one of his assets. So he had a painting in his house worth $6 million. Now, that painting is one of like a renowned paintings. I can't even talk about what it was, but even to go ahead and get that insured, so we'll insure fine arts, we'll insure. He had this heirloom jewelry from some royalty, which is at about $200 million. So we couldn't even insure that at this level. It had to go to reinsurance. We had to offload it to a specialty carrier. So with me, it's all unique. It's all different. It's umbrella lawsuits. That's something I do a lot. Like, we had a client who had a party in his backyard, and the children were like horsing around, and one of the teens was pushed into the pool and he banged into a rock kind of a structure. Now, this was a medical student, like a very affluent family, but he was, after that accident, he hit his tailbone, hit the fag end of that rock structure, and he was very badly injured, deemed quadriplegic for life. That family went after our clients for a massive lawsuit that you had, like there was alcohol involved. There were things that shouldn't have happened, but things like this happens. So we have this product called umbrella liability that we defend you as a client and will protect you against lawsuits. We can start with 5, 10, 15, 25 million. The highest I've done is 50 million. We may not need that much, but usually 5 and 10 million is a good place to start for lawsuits against you. It not only covers you on your homes in Canada, it covers you anywhere in the world. So say you're driving in Italy and you crash into this cafe, and you'll say, well, my Amex has my car covered, but what about the glass that you shattered and that owner that you injured with this car accident? Who's paying for damages for that? Your Amex is not going to pay for that. So that's when this umbrella liability jumps right out and defends you as clients. Now, these are very unique to my product. It's not available at the retail division. So anyone who would like to discuss umbrella liability or lawsuits or any high-end insurance, that's exactly what I do. A very small niche product with an RBC. So that's
I think
me.
Director's liability is one of them as well, right? If somebody's on a board as a director, is that, if am I mistaken?
But that's a non-profit, non-profit only. Anything for profit, we wouldn't cover. So if you are personally on a condo board or on a board of a non-profit, yes, we'll extend the liability to you. But if it's a for-profit company, it doesn't extend anything. This is only meant for personal insurance, so personally covering anyone. So that's me in a gist. I don't know if I had exciting stories, but I'm very niche.
I find exciting. And let's see, this was one of the sort of like that case. Yes.
the case study. So my typical client would have a home in Toronto, just for an example, a cottage in Muskoka. They'll have lots of jewelry, fine arts, boats, sea-doos, ski-doos, ATVs. The wine collections, high-end appliances, sub-zero fridges, geothermal heating systems, that kind of setup. So when they come in and they're like, okay, I need a comparison for my insurance, half the time they don't even realize that they're in a completely wrong product. Like it's like an insurance for a Ferrari, but you're just getting the bare minimum needed for a Toyota. Like, so you're so much undervalued that that's when I'll sit down and I'll pick up the gaps in insurance and I'll let the client know that these are your gaps, these are our offerings. You either take this and go back to your broker, but this is a service we offer as clients of Dominion Security. So I work very closely with RBC Wealth Management, and all their clients can just be referred to us for a review, and we'll pinpoint. We do a complete review for your clients, and we'll offer you our suggestions and recommendations. That's what we do, yeah.
Yeah, no, appreciate that. And I will sort of see if there's any questions. Yes, that for both of you. Let me just see if there's anybody that raised their hands. I did have some issues with the chat earlier this week where I think folks did put questions in the chat, but I had issues seeing it. So if you happen to put questions in the chat and I'm not reading it, it might be an issue on my end, but I can see when the hands are raised. So I'm just going to keep an eye on that part real quickly. And, you know, hopefully this is something that one, as I mentioned at the beginning, whether you are new to some of these things that were discussed, you know, and as Peter had mentioned, an entire presentation could be dedicated to each of these three different areas. There could have been an entire presentation that Peter could have done. He touched on 5 out of the 10 sort of things. And Roshan could have also filled up the entire presentation and just scratched the surface. Likewise, Melissa. So, you know, the whole idea is to, one, close that awareness gap, you know, make individuals aware of what exists. If it's something that you didn't know, you know, that's progress. And you can also then take further steps in researching, you know, finding information online, reaching out to myself or anyone here, because the way we operate and the way we work is very collaborative. So if it's something that, you know, myself, if I get asked and I don't know, or it's not my area of expertise, or I know it just was a degree, we're not going to leave the individual sort of hanging or left to their own devices. We'll dig deep within the organization to find the appropriate person or department that has the skill set to be able to solve that problem. So that's one of the real values, the collaborative approach across the ecosystem, across the ship. So it's never an issue for somebody from one department to message. We've got a, you know, very robust internal messaging service that people quickly communicate or pick up a phone, call, email, and then again, coordinate joint meetings with the client, with their advisors, could be their accountant, could be their lawyer. So, you know, some of the stuff that you just discussed, Melissa, potential somebody's being sued, like needs to jump on a phone call with their lawyer and their insurance sort of rep to sort of determine, okay, where do we go from here? So that's something that I think you want to leave everyone with. And with it's been a lunch and learn, we wanted to make sure that we sort of kept it within the time frame, so folks that are sort of, you know, on their lunch break are able to, one, get the info, get back on time or before time, if you know, to sort of finish your sort of formal lunch break. So if there are no questions at this moment, again, feel free, you can always reach out to us afterwards. And I do want to point out, I'm just going to share my other screen here, that the other sort of session that we were looking at exploring with beyond banking, we are not going to be able to do that. So this one will be the last one. Just weren't able to coordinate logistically the presenter. So, but at the end of the day, still really grateful in what we were able to achieve in bringing a lot of knowledgeable people together over the month of April. And for future webinars, same place you can find them on the event section of my website, orlandolopez.ca. And these are recorded, so if you missed it, you can, or if you sort of joined late, you can always get the recording or share with anybody else. And the real big sort of thank you, I do want to thank all the presenters that were available over the series. I do want to thank you, the attendees that took time to join, to listen, to learn, and to be engaged. It's been quite a privilege for me, and I've learned as well. I'm always picking up, nuggets along the way, which I hope is the same for you. So with that, we're going to bid farewell. Melissa, Roshan, thank you very much, and Peter, who's not here right now, but certainly appreciate his insights as well. And enjoy the rest of your Thursday and the weekend that is coming up. Stay safe and manage those risks. Really stay safe.
Thank you. Thank you. Thanks, Orlando.
All right. Take care, guys. Bye-bye.